Let's start with a sound we all know. The opening bell. It's supposed to signal the start of a trading day full of energy, growth, new companies coming to the market. But for London, that sound has become an echo. It's ringing in an emptier room. Here's the brutal bottom line fact that made this official. For the first time in living memory, London has completely fallen off the list of the world's top 20 places for a major company to launch itself on the stock market. What's called an IPO? Think about what that means. A brand new company full of potential looking for a global stage, and it's not even considering London anymore. The money that should be pouring in to fund the next generation of giants, that money has dropped by almost 70% in a single year. You don't need to be an economist to understand that. If you're a startup dreaming of being the next global name, you're not looking at London's launchpad. It's like the city's premier job fair has no new companies showing up, and that starves it of its future. This isn't a bad week on the trading floor. This is a signal that the machine designed to create future wealth has broken down. So where did all that energy, all that money go? To understand that, we have to talk about Brexit. But forget the political arguments for a minute. We're not talking about headlines or debates. We're talking about a simple physical movement of people and assets. The real concrete cost. After the Brexit vote, the rules changed. To keep doing business easily inside the massive European single market, financial firms needed a new address inside Europe. And so they moved, not with a big announcement always, but quietly, decisively. We're talking about over 440 major banks, insurance companies, and investment firms. They packed up key parts of their operations, their legal headquarters, and moved them. They took more than $1 trillion in assets with them to new hubs in Dublin, Paris, Frankfurt, and Amsterdam. Thousands of high-paying jobs went with them. This is the crucial part. This wasn't a temporary shift. This was a permanent rewiring of the financial map of Europe. London didn't just lose some business. It watched as a whole new network was built across the channel, connecting Paris to Frankfurt to Amsterdam and deliberately leaving London more on the outside. The $1 trillion exit wasn't a protest. It was a new reality. We've seen the companies and the capital flow out. Now, let's talk about the people, specifically the people with the most money and therefore the most options. Last year, reports showed the United Kingdom had the biggest net loss of millionaires of any country in the world. Thousands of high-net-worth individuals choosing to make their homes somewhere else. But this isn't just about tabloid headlines of the rich getting out. Think of it as a signal. If you had $10 million or $100 million, where would you park it? Where would you build your life for the best combination of safety, lifestyle, and keeping more of what you earn? These individuals aren't just moving their homes. They're moving their fortunes, their investments, and their spending power. They're going to places with sun, sure, but more importantly to places with very clear, very friendly tax rules for the global elite, like parts of Italy, Portugal, or the United Arab Emirates. They're voting with their feet and their bank accounts on where they see the best future. When the people who can live anywhere start choosing not to live in London, it tells you something profound about confidence. And then came the real psychological blows, the corporate defections. We're not talking about obscure firms here. We're talking about homegrown British success stories, companies that were born and scaled up in the UK. Looking at the global stage and deciding that London was no longer their best ticket to the top. Take a company like Wise, a massive fintech success story out of London. In 2024, it made the decision to shift its primary stock listing to New York. It's a pattern we've seen before with other giants. They feel they can get a better valuation, attract more serious investment, and get more attention on the US markets. Think about what that does to the spirit of the place. For an ambitious tech founder in London today, the path to becoming a billion-dollar company seems to point west across the Atlantic. The message is to be a global player, you can't stay here. London is left pitching hard to attract the next big thing from abroad while watching the champions it already created turn and walk out the door. It's a battle for identity. And right now, London is struggling to tell a convincing story to its own best and brightest. So, If London's launchpad is broken and its stars are leaving, where are they going? For the biggest companies with the biggest dreams, the answer, more often than not, is the United States, specifically Wall Street. But why? It boils down to one word: scale. The US financial markets are the deepest and most liquid pools of capital on the planet. Think of it like this. If you're a company trying to raise $1 billion, do you go to the neighborhood swimming pool or do you go to the ocean? The American market is that ocean. It has a vastly larger number of massive investment funds, pension funds, and everyday investors. This creates what analysts call a liquidity premium. In simple terms, a company's shares are often worth more in New York because there are so many more buyers and sellers. That means a higher stock price, which makes founders and early investors richer, and it gives the company more financial firepower. For a CEO choosing where to take their company public, it's not really a difficult choice. It's a financial inevitability. But the story isn't just about America taking the crown. Europe, which lost so much business to London for decades, saw an opportunity and seized it. This wasn't just luck, it was a deliberate strategic fight back. When Brexit happened, European capitals like Paris, Amsterdam, and Frankfurt didn't just wait for business to come to them. They actively rolled out the red carpet. They streamlined regulations, offered tax incentives and made it crystal clear to banks and trading firms, move your operations here and we will make it easy for you. And it worked. Vast volumes of euro-denominated stock trading which once flowed through London now legally have to happen inside the EU. Major banks moved thousands of staff and trillions in assets. The European Union set a firm deadline to pull the clearing of euro derivatives, a hugely lucrative business, back onto the continent. This is the key point. Europe isn't just picking up London's scraps. It's consciously reclaiming financial sovereignty it had lost. It's building a rival network. And it's doing it by taking specific high-value pieces of the financial puzzle directly off London's table. The global shift isn't just a story of the West. As economic weight moves east, the centers of financial gravity are moving with it. Enter hubs like Singapore and Hong Kong. Their story isn't one of aggressively taking business from London, but of strategically positioning themselves as the new safe, neutral ground for a fracturing world. These cities have built a powerful appeal, immense political stability, trusted legal systems based on British common law, and some of the world's most business-friendly policies. They market themselves not as replacements for London or New York, but as the perfect stable bridge between East and West. For a billionaire in Indonesia, a tech founder in India, or a family office in mainland China looking for a secure global place to manage wealth, these Asian hubs are now the obvious choice. They capture the massive new wealth generated in the world's fastest growing region. They don't need to defeat London in a head-to-head fight. They're winning by becoming the indispensable home for the next century's capital. In a race to attract the world's money, London tripped over its own rulebook. While rival cities in Europe and the Gulf rolled out slick, simple tax breaks for investors and fast-track visas, the UK was stuck with a complex system. Taxes on investments were higher. Reforms were debated slowly. The world's financial elite, who can work from anywhere, simply went where the rules were clearer and the tax bills were lower. In a hyper-competitive world, London's old complicated way of doing business became a major liability. Perhaps the most telling sign of a city's future is what it does with the next big thing. And for London, there's a glaring gap. The city is a powerhouse at creating tech startups. Its universities and venture capital scene are world-class. But when those startups grow up and need to become global giants, they increasingly feel they have to leave. This is what experts call the funding gap. London's stock market has traditionally been brilliant at valuing old economy giants, banks, miners, oil companies. But it has struggled to understand and value the future. Companies built on software, data, and intellectual property. The investors with the deepest pockets and the appetite for big long-term bets on tech are overwhelmingly in the United States. So, a pattern forms. A brilliant idea is born in London. It gets early funding in London. But when it's time for the multi-billion-dollar coming-out party, its founders board a plane to New York or Nasdaq. London cultivates the saplings but misses out on the mature world-dominating trees. It's left with an economy anchored in the past while the industries of the future list their shares elsewhere. So after all this, the exodus, the rivals, the self-inflicted wounds, where does this leave London? Is it game over? Not exactly, but the game has fundamentally changed. The age of one undisputed financial capital ruling the world is over. We're now in an age of multiple hubs, each with a specialty. London's path forward isn't about being everything to everyone again. It's about what it can still be best at. It remains a global leader in foreign exchange, trading, and professional services like law and accounting. It's making a serious push to be the world center for green and sustainable finance. Its future is as a powerful, sophisticated node in a global network, not as the sole center of it. The real question is whether it can be the most crucial bridge connecting the financial power of the Americas, Europe, and Asia. The crown hasn't been passed to a single successor. It's been fragmented, and London now has to learn how to thrive in this new crowded and competitive world.